Hello everyone, our topic is financial analysis of three companies based on DuPont analysis. We selected three renewable energy vehicle companies, namely NIO, BYD, and Tesla. Our group's presentation is mainly divided into five parts. The first part is introduction. The second part is chapter 1. Chapter 2, it analyzes NIO's financial position. The third part is chapter 3. It analyzes BYD's financial position. The fourth part is chapter 4. It analyzes Tesla's financial position. And in the corresponding section, we calculated relative data to evaluate their financial situations in the past 2 years and predicted the future trend. Finally, we will compare the financial position of the three companies. As a summary of the financial analysis, we give recommendations for shareholders to invest and to concern. Okay, this is the background of the industry background of automobile. And next, I will introduce the DuPont analysis. In 1919, the DuPont company in United States proposed and applied a new financial analysis method known as the DuPont analysis method now. This method is characterized by its comprehensiveness and precision. It can evaluate a company's capability in three perspectives, which are financial capability, operational capability, and profitability. In the DuPont analysis, ROE is a core indicator which represents the overall capacity and the possible return of a company. So we can use it to decide which companies are worth investing in. A noteworthy point is that all figures mentioned in 2022 are calculated using trailing 12 months because we don't have access to data for the whole year in 2022. Okay, now let's begin. The first company is NIO.
Okay, NIO is a smart electric vehicle brand incorporated in Shanghai in November 2014, represent China's high-end electric vehicles to compete globally. In November 2014, NIO was launched and founded by Bin Li and received investment from dozens of well-known institutions, including Baidu Capital, TPG, GIC, IDG, and Present Capital. On September 12, 2018, NIO was listed on the U.S. New York Stock Exchange. Then we will analyze the NIO's financial capacity. From 2021 to 2022, the company's current assets decreased slightly, and the company's current liabilities increased rapidly. The decrease in the current ratio in 2022 is due to the change in current liabilities. In the near future, the company is carrying more current liabilities, which means there is more financial pressure. The company will not have a large amount of cash or cash equity to pay off its debts. Between 2021 and 2022, NIO's inventory increased significantly, and the quick ratio decreased. It can be inferred that this company's short-term solvency declined. This is mainly because the companies have more inventory and less cash. The company has less ability to liquidate in the short term. Then, about the calculation of NIO's debt ratio and time interest earned. These two figures together reflect the company's long-term solvency. It can be inferred that the company's long-term solvency decreased. Then we can see the analysis of the equity multiplier trend shows that NIO's equity multiplier has increased in the last 2 years, and the business risk of the company has increased. Overall, this company is in a poor financial position. The equity multiplier analysis shows that NIO is under more financial stress and has a higher level of risk in its operation. Then we can see this table. It can be inferred that NIO's operating revenue and total assets has increased steadily in the 2 years from 2021 to 2022. And the total assets turnover ratio has declined slightly, but is generally stable. The high total assets turnover ratio of NEO indicates that the company's assets are turning over quickly and the capital is being utilized more efficiently. Now we can see the calculation of NEO inventory turnover. From the table, it can be concluded that the stock turnover of NEO is very fast, but show a decline, which is basically in line with the change of total assets turnover ratio. On the next table, it can be seen that NEO accounts with reliable turnover rate fluctuates greatly, and it should strengthen account reliable management. Next is about the calculation of NEO's day sales outstanding. NEO has a low number of day sales outstanding, but showed an increase, which indicates that the speed of return is full and the ability to realize is slow to reduce the number of day sales outstanding. The next part, the fixed assets turnover rate is getting lower, and I think it needs to get higher to improve the utilization of fixed assets. Now, we need to analyze the profitability. As a whole, operating profit and expense are growing inversely, and the profit of NEO is decreasing while expenses are increasing. Therefore, it can be concluded that NEO's operating profit margin decreased because operating costs are increasing faster than operating income. Thus, we can see that NEO Auto recent earnings are in a negative growth phase and in a loss-making state, and it cannot obtain sustainable earnings in the short term. The shareholders' investment in NEO is very risky, and there is a high probability that they will not receive any return. That's all.
Okay, first let's take a look at what BYD company is. BYD is a high-tech private enterprise in China, headquartered in Pinye, Shenzhen. BYD now has more than 1,300 employees. On July 31, 2002, BYD was listed on the main board of Hong Kong, setting a record of 15.5H shares with the highest issue price. 2007, BYD Electronics Limited was successfully listed on the main board of Hong Kong with satisfactory performance. BYD has three major industries: IT, automobile, and new energy. Until now, it's still the leader of China's new energy vehicle company. Next. Next, we see the BYD's financial capacity. In summary, the company's current liabilities are on the rise, but the company's current quick ratio are both on the decline, which means that the company is under great short-term financial pressure. Okay, next we can see the BYD's debt ratio and times interest earned. From the data, we can see that the company's debt ratio is on an upward trend, which means that the company's REIT is also generally increasing, and the BYD's equity multiple. The equity multiple ratio should be moderate. A small equity multiple ratio from the data means that the company is not actively using financial leverage to expand its operations. Next, we can move on. Calculation of BYD's total assets turnover. From the data, which indicated that the capital is being utilized more efficiently. The profitability is improving, and the efficiency of using all assets for operation is generally increasing, and the inventory turnover. The above graph shows that the operating cost is increasing year by year, and total inventory is also showing an upward trend, but the inventory turnover ratio remains unchanged, indicating that the company's turnover rate needs to be improved. Let's move on the receivable accounts turnover. The above graph shows that the company's accounts receivable turnover ratio is on an upward trend, indicating that the company indicates that the ability to collect accounts receivable is increasing year by year. And the sales outstanding, it can be inferred that the company's fixed assets turnover rate is on the rise. It is concluded that the company's utilization rate of fixed assets has been higher in the past 2 years, and the company's management level is better. And we can see the profitability from the chart above. The company's gross margin is trending upwards, indicating that the company's gross profit is large enough to better cover the associated labor, marketing, research and development, and many other costs associated with selling the product. And let's move on. The last part is BYD profitability indicators. It can be seen from the above figure that the company's basis profitability is on the rise, indicating that the company's profitability is relatively good. A company's return on assets is trending higher, indicating that the business is better able to use what it has to generate income. So that's all. The above is the analysis of BYD company. The following time is will be handed over to my classmate.
Okay, Chapter 4, Tesla Financial Analysis. Next. First, I will introduce company profile. Tesla company is an American company that produces and sells electric cars, founded on July 1st, 2003 by engineer Martin. And on July 10, 2018, Tesla settled in Shanghai. Tesla has earned a reputation as a gold standard over the years and is now much larger in entity than it has been since its initial public offering in 2010. The company's three-pronged business model of direct sales, service, and electric vehicles charging sets it apart from other automakers. Touted as a revolutionary automakers of clean energy, Tesla is more than just a car maker. Next. So I will analyze Tesla's financial situation from the following three aspects. First, Tesla's financial capacity, about the current ratio and quick ratio. From the table, we can see the current ratio of the company in 2021 and 2022 is lower than the general accepted standard, so the company should take measures to adjust the ratio to current assets and current liabilities to improve its short-term solvency. About quick ratio, Tesla's financial risk is low and its debt service capacity is strong. Next. About Tesla's debt ratio and times interest earned. So the two figures reflect the company's long-term solvency. It means that the company has a good repayment capacity. The company is more able to afford the interest. So about the Tesla's equity multiplier, the figure indicating that the proportion of capital invested by owners to total assets becomes larger. The degree of indebtedness of an enterprise becomes lower, and the degree of protection of educators rise and interest increase. Next. Overall, the company is in a better financial position with less debt and more current assets between 2021 and 2022. But the company has to improve its short-term solvency. The analysis of the equity multiplier shows that the company is under less financial pressure. Next. So now I will introduce Tesla's operational capacity. About the asset turnover ratio has increased. Capital is being utilized more efficiently. The profitability is being improved, and the efficiency of using all assets for operation is being gradually improved. So about the inventory turnover, the company's inventory turnover is very fast and on an upward trend, which is basically in line with the change in total asset turnover ratio. Next. So about Tesla's receivable accounts turnover. The company's accounts receivable turnover ratio is on the rise, which indicates that the company's efficient management of bad debt losses are low and its short-term debt repayment ability is strong. About Tesla's day sales outstanding. As you can see from the table, there was a faster payback and better efficiency in the use of liquidity in 2022 than in 2021. Next. About Tesla's fixed asset turnover, the higher value in 22 years compared to 2021 years indicates a higher utilization of fixed assets and an increasing level of management. It reflects the better utilization of corporate assets. From the above 5 assets, we can see that Tesla has relatively strong operational capabilities and a good management level. Next. So now I introduce Tesla's profitability. So from the table, we can see about the first one, profit margin. Its products have high added value. Its main business is competitive in the market. Its development potential is high, and its profitability level is high. About the gross profit margin, Tesla's good scale effect and strong management ability will lead to high cost control, making the gross profit margin higher. About the operational profit margin, indicating that the company has been developing well in the recent period, and the profit from the sale has increased. EBITDA coverage. The company had sufficient invested coverage to cover its interest expenses for the last 12 months. This is also a reflection of the increase in sales and revenues. Next. Tesla's indicators. First, that's BEP. This shows that investors are optimistic about the future development of the company. The company must have, second one, that's ROA. The company must have a strong return on assets, and the situation has continued to grow in both years. About ROE, if ROE greater than 20% means it's a very good company to invest in. The company has a high return from investments and a strong ability to earn net income from its own capital. About EPS, that's the profit per shares earned by the company's common stock in a year, increasing, and the profitability of the company is improving. So comprehensive review. The above table shows that Tesla has increased in all figures, which means that the company's capital is being used more efficiently, and investors are getting higher returns on their capital invested in the company. investors are optimistic about the future development of the company, and the future yield of the stock has increased. So that's all. I finished.
In the last part, I will compare three capabilities of the three companies on DuPont Analyze. From the following graphs, we can easily see the trend in the past 2 years. The first graph is equality multiplier. It reflects the company's financial capacity or ability to service its debt at the time. In the chart of equity multipliers, the highest line is Tesla, the lowest line is NIO, the fastest growth company is BYD. Net profit margin reflects the company's profitability. In the chart of net profit margin, the highest line is Tesla, the lowest line is NIO, the fastest growth company is Tesla. Next. Total asset turnover ratio reflects the company's operational capacity. In the chart of total asset turnover ratio, the highest line is Tesla, the lowest line is NIO, fastest growth company is Tesla. The only decline company is NIO. As you can see, ROE can also give us the same insight. So now we could get a conclusion. When comparing the three companies, Tesla is the most capable, BYD is moderately capable, and NIO is the least capable. So in three companies, Tesla is most likely to deliver more benefits. Shareholders should put more investment into Tesla rather than into other companies. The member of our group are shown on the last slide. 10 members are in our group. And you can see all of us in this video. We work together to finish our group report and this video presentation. Okay, our presentation is over. Thank you for watching.
Thank you.
Thank you.
Thank
Thank
you.
you.